Hello everyone and welcome to Blue Chip Investing. I'm your host David Reinhardt, and before we get into this video, I would like for you to please like this video and subscribe to our channel. By subscribing to our channel, you are given content as soon as it becomes available, and you also are helping us grow our numbers as well as just by viewing the video and liking the video. We hope that we're a help to you. Check us out on Blue Chip Investing on Facebook and also on Twitter so that you can ask us questions before we go live on YouTube, and we can help you with some of the questions that you have in investing. So one of the questions that I got on Twitter was that someone was asking me, is there any way that you can guarantee yourself income every month regardlessly? And I sort of found that is somewhat of an interesting question, because I've been doing a lot more of this typical method lately, and so I figured I would go ahead and share. I thought that this fit in well with what I've been working on lately. So in our previous video, we talked about selling puts and covered calls and gaining premiums from those. So basically what we're going to do here is basically the same thing, only we're going to try and understand how we can benefit from stocks that we like being in their trading range. So let's go ahead and I will show you a trade that I was able to work out pretty well the other day on CenturyLink. So as many of you know, CenturyLink is one of my all-time favorite stocks. I absolutely love this stock. I've traded it a lot over the past year. I've made a lot of money. It's a money-making machine. Pays out a nice dividend. Really like the stock. So I've been toying around with CenturyLink around the 23 area now since about December of last year. So I like owning this stock at 23 right now. And it has dropped down as low as 22.33. But 23 is a very good entry price, and I actually sold this stock right in this area just a few weeks ago. So I've been looking for a re-entry, and when it dropped on earnings, I waited to see what it was going to do once it hit 23, and it bounced and it got to about 23.50. So what I did was I went ahead and I came to the trade tab here for CenturyLink. And so what I did was, I'm sorry, that's MRO. There we go. I came to the trade tab for CenturyLink. And at the time, the options looked different, but we're going to go ahead and look at these. So I was looking at the $23 put. So as we know, by selling puts or selling covered calls, we're going to get the lower number here, which is the bid price, and basically we're going to multiply that times 100. So 100 times 5 cents is $5. So a few weeks ago, 23, after it had dropped, was paying out 25 cents, also known as $25, per 100 shares that I was willing to buy at $23. Well, I like buying this stock at 23 anyway. I didn't really think the stock was going to get to 23, but I do like making money, and if the stock got down that low, I was going to go ahead and buy it. So I went ahead and I wrote these $23 puts. So that gave me $25 per contract that I wrote. I wrote 5 of those contracts, so I got a $125 premium just for writing those contracts. If you'll notice, the expiration date was May the 19th, so we're looking at next Friday or when these expire. If the stock finishes at 23 or above, I collect my $125, the option goes away, expires worthless, I take all the money. If the stock drops below 23, I still, in essence, keep that premium. However, I have to buy my shares at $23. Now, you could also sell your put for a loss, but at that point, I want the stock at 23 anyway, so if it gets to that point, I'm going to go ahead and buy it at 23. So, as we noticed, CenturyLink had a big day today, up 5%. Now it's at 24.80. The chances of this thing getting down to 23 or below by next Friday are pretty much as slim as it comes. If we look here, our ask price is basically, I refer to this as how much money we still have left to collect. I still have 10 cents left to collect. So I have $10 on every contract left to collect, which would be another $50 that I will be collecting here over the next week and a half. Now, that means that I've basically made $125 just for knowing that I was going to buy a stock at $23. I was comfortable buying it there. I had the capital to buy it, had it fallen, and now the stock's almost at 25. It's easy money. So, no, there is no way to guarantee income because, one, anything can happen in the markets. And if this stock were to have dropped to 21, I would have lost a lot of money. However, you can guarantee yourself a certain return by writing puts and or calls against your stock. The most important part of doing this is that you are in a stock that you are comfortable trading, that you have traded in the past, you are confident in its price range, and you are confident in the strength of the business. If you're comfortable with all of those things, you can make yourself a nice monthly income just by selling puts, and I'll show you what I mean. A lot of people are not large on MRO. However, I really like Marathon Oil. I think it's a great trading stock. I don't really see it as a stock that is in jeopardy. I really like this stock. So what I've been doing is, and you can see here, these are my options that I've wrote. I have 3 currently. So what I've been doing is when a stock gets down in my price range, I'll go ahead and I will look at the options that I'm currently looking at. So let's go ahead and start with, well, I'll tell you what, let's go ahead and look at what I've done actually. So right here we're looking at a 1350 put on MRO. At the time that I wrote this 1350 put, it was worth 27 cents. As you can see, it is now down to 5/8. I'm sitting pretty. It's telling me here that the probability of this being in the money by the end of next week is only 14%. So I have an 86% chance to collect my 27-cent premium, which is $27 per contract. Now when I do these, typically I buy shares of MRO by the 1,000. So I'll buy 1,000 shares at a certain price. So what I've been doing is I've been taking this out by 4 weeks, and I will go 2 contracts, 2 contracts, 3 contracts, and 2 contracts. So within any given month, I could be given 1,000 shares of MRO at a certain price. I'm fine with holding MRO underneath a 14 at any point, so I have no problems with that. I have the capital to back up this trade in case MRO were to have a disastrous 15–20% drop, I have the capital to protect myself and take those shares. So what I do is I write new puts every week that this stock stays within the range that I've been trading it at. So we look here, I was able to write 2 of those, which is going to give me a $54 premium whenever May the 19th comes and expires. So now we come to May the 26th, where I wrote a $14 put. At the time that I wrote this, it was selling for 35 cents. So that was a $70 premium that I was able to pick up. Basically here, the probability of that happening is 36%. So I have a 64% chance of collecting the whole premium and not having to take any shares. So that brings my grand total over 2 weeks of $124 gain. And all I'm doing is telling these investors that are buying these options that I am willing to take your shares at this price. So if we come to the next week, once again, here we go, we have $13.50. At the time that these paid out, they were at 29 cents. So if we look at that, now this was the time where I will write 3 of them. That's why I went with the $13.50. I also went with the $13.50 because if the stock were to drop, it would act as a little bit of a dollar cost average. So I take my 29 and I multiply that times 3, which is going to give me an $87 profit, and that's going to raise me up to $211 over a 3-week span. And then I'll come down to my June 9th, and we see here that the $13.50 is selling for 26 currently, and the 14 is selling for 41. I'll most likely write the next 2 at 14 again, which will give me a 41-cent premium, which will give me an $84 gain, and you will be looking at a total gain of $295 for the month. And that is just for basically telling investors that are buying these options that you are willing to take up to 1,000 shares of MRO between $13.50 and $14. So if we look here at the chart, this is that's CenturyLink. This is the 1-year chart on MRO. So we're not seeing a lot of times where this stock has been below 14, especially lately since it's trended up. So our risk here, if you'll notice, the last time this stock was below $13.50 was on November the 2nd. So we are basically telling investors that we are comfortable taking shares at 14 and $13.50 in this range right here. And for that, we're going to get $295 just for taking the stock at the price that we said we were going to originally take it at. So to answer the question, yes, you can somewhat guarantee yourself some income. This is nice because if a lot of trades really aren't just popping out at you and you're looking to make a little bit of safe cash, this is a very nice way to do it. I'm going to collect $295 this month just for obligating myself to buy shares of MRO between $14 and $13.50 over the next 4 weeks. I was also able to cash in on a nice $125 profit on CenturyLink since I was taking puts at $23. So there is a lot of upside with this. However, if you're going to employ this strategy, I ask you a few things. Please only do this with stocks that you are comfortable trading. Only stocks that you are comfortable with. only stocks that are strong stocks that have really no chance of going belly up. So we're looking at blue chip stock, Fortune 500 stocks, stocks that are very strong. By doing this, you will help reduce your risk tolerance, and you will also be able to sleep better at night. I can promise you that. So please only use this if it is a strong stock and a stock that you have traded and you're comfortable trading. Also, please have a can't talk today. Please have a backup plan, because too many people go into trades without backup plans. And even though it looks very promising and I feel very good that I'll have $295 at the end of the month, there's a chance MRO could open at 12 tomorrow, and I'm going to have to take all those shares once their expiration dates come up. So you have to have the capital to do this. If you don't have the capital to do this, I advise you not to do this. It's too risky. Always be able to back up your capital. So if you can do all of those things and you have a price range of a stock that you enjoy trading, then this is the perfect strategy for you. Even if the stock isn't in that trading range, you can still make money by selling those premiums at that level. If you have any questions at all, please feel free to reach out to us on our Facebook page at Blue Chip Investing. You can also leave a comment in the section below. And once again, I ask that you please like our video and subscribe to our channel. Thank you again for everything, and have a great night.